Start the recording straight away so I don't forget. Okay. Hello, Azuka.
Hello.
Hey.
How you doing, Azuka? How are you?
I'm doing good. It's nice to be here.
Great to have you. Are you new with us this evening?
Say again?
Are you new with us this evening? I think we've lost you there for a second. How you doing, Sharu?
Hey. A long time no see.
Paula, hi Simon.
So good to see you.
Sorry, something in my teeth here. I just had my I just had my protein shake with spinach in it, and I put my Invisalign.
At least you noticed.
I came back from a run, and I was like, no, today I have to make it to the meetup. I have to. It's been months, and then suddenly after having my shake, I put in my Invisalign, and it's just so funny. The spinach is sitting there.
It's great to see you, Wani. It's amazing to have you back.
Yeah.
Hi, Paula.
Hi.
Hi,
Haven't
Hi,
seen you in ages.
Yeah, that's true. That's true.
Your hair's got real long.
Exactly. Yeah.
I wish I could do that, but gone are those days.
Hiya, Henrique. How are you?
Oh.
Look who's here this
There's a
evening.
face
It's
I've not
great
seen
to see you,
before.
Doug.
Hello, how are you?
Good. How are you? Where are you?
I'm at home.
Oh, okay.
That behind me is where I sort of I don't live in the water, but I live on that side of the channel. That's the
Lovely. Lovely. How you doing, Rob?
Evening all. Good to see you.
Great to have you.
Yeah.
So it is. Your hair is
Likewise.
looking fairer as well this evening.
I was
What's going
thinking
on?
There's no gel today.
Marco's here as well. Hi,
Hello.
Marco.
For
How are
any
you?
reason, I cannot put my webcam, but you can hear me, right?
We can indeed hear you. Of course we
Okay,
can.
very nice to be here.
Great to have you,
Shy
Marco.
tonight, Marco.
Sorry, can you repeat?
Are you shy tonight?
Yeah, I'm trying to figure out how to put the camera on because this is a new camera. And I cannot find the way, so.
So in Zoom down the bottom, where you have the video option.
Yeah, I'm
Are you
clicking in everything, but never giving the option to the camera.
Oh,
But it's
do you know what you
because
could
the
do?
camera- Yeah.
Why don't you jump on as an avatar and see if that works?
Where is the avatar?
So when you go into the camera,
Yeah.
under camera settings, you should have the option for backgrounds, and then under that it says choose avatar.
You should have a more advanced version than mine because I don't have that option.
Ah, Simon has his
Oh.
avatar on there now.
Yeah, What
So
I'm
for
going to do, I'm going to leave and I'm going to come back to see if it sorts this problem.
No
Okay.
problem, no problem.
Okay,
Well, look,
see
I'm
you in a
just going to
minute.
jump into the slides anyway now, so you won't miss anything.
Okay, see you in a
So
minute.
to everybody else as well, welcome this evening. It's great to have so many new faces and so many familiar faces here with us this evening. What I'm going to do is I'm actually going to jump straight into the slideshow and just go through our code of conduct and that for everybody that's not familiar with it. So I'll just start the slideshow. So welcome everybody to a Block of Crypto Ireland. Tonight is hosted by myself and Simon. We do have a Telegram group that we'll drop a link to into the chat in a few minutes. So please do join the Telegram and feel free to carry on the conversation afterwards. For everybody that's come through meetups.com or from Eventbrite, there should be a feedback form at the end of the meetup that you'll get from them. If you could fill that in, it'd be really grateful because it'll help other people find the meetup. We are recording this evening, so if you don't want to appear on camera, just switch off your camera, or alternatively, as we were shown there a few minutes ago, you can appear as an avatar. We don't mind having avatars on with us at all. so we don't. We'll be using the recording then for the replay page. And if there's any good snippets, good chunks of information that we think people will find useful, we'll cut them into shorts and we share them on YouTube. We also have a survey that we've been just trying to build up a profile of our members and the different people that we get coming in and out of the meetup group, because we want to just get a better feel for the types of people that are attending the meetups, so we can just make better meetups moving forward. And new Crypto Bytes, I actually mentioned last week. We launched a small short crypto byte on the website, and what a crypto byte is it's a learning module of less than a half an hour, most often less than 20 minutes actually. And it's just for people that are on the go, that they don't want to be doing courses, but they want to know stuff. So we're going to build up a whole library of crypto bytes. And this was just a first sample one to put out there, but we'll be launching a lot more of them and in blocks moving forward. So that's just, you can find them on our website. So our code of conduct, oh, and of course the crypto bytes are free, the courses are free. So yeah, we're not looking for money. In our meeting this evening, we ask everybody to be aware of others, to be friendly and patient, to be welcoming and respectful, to be open to all questions and viewpoints, to be understanding of differences, and to be kind and considerate to others. So our upcoming events, well, tonight we're gonna try and stick to the topic of DeFi, because we haven't talked about DeFi in a long time, and we go through some stuff hopefully that will suit all levels, from beginners all the way up to more advanced stuff. Again, don't be shy with questions on it. Next Tuesday, we have Simon with a Block of Crypto UK and their meetup starting at 7 o'clock. Of course, everybody's welcome to that, no matter where you're from. And then the week after that, we're back here and we're going to have a panel that evening. I'll announce the speakers in the announcement that goes out through the emails. And the panel is going to be, it's kind of following on from our chat that we had with Owen there a couple of weeks ago on employment in Web3. And this chat is going to be on personal branding in Web3, because personal branding online, whatever it is that you're doing online, is part of your personal branding. And if you're looking for any sort of job, whether it be in Web3 or not, you need to make sure you have your social medias right as such. So we have a panel of experts on around personal branding that week. So I am going to stop sharing now. So I am, and I see loads more came into the room. Hi, Jacinth, how are you? Elena, how are you?
Very well. Good to see you guys.
Good stuff. And everybody else that came in as well. There's loads of names down here on the side that I haven't said hello to, so I'm not leaving any of you out at all. So as I said, tonight we are going to talk about DeFi, and I know we've got lots of different experience levels in the room. So first of all, I'm going to ask, you should have some reactions that are available to everybody in your Zoom menu. So under the reactions, if you have used DeFi, can you put your hand up or a thumb up, please? Good stuff. Okay, so we have lots and lots of DeFi users in here. Has anybody used, so I'm going to ask another question now. Has anybody done liquid staking? Okay, we've only 3 hands up this time. Okay. Has anybody added funds to concentrated liquidity pools? Okay. And has anybody used any borrowing or lending platforms? Okay. Okay, we've got a mixed bag of experience. We're actually going to cover all of everything that I mentioned there this evening. We're going to try and cover and show little demonstrations too, okay? Robert, you had your hand up there a couple of times. Can you just explain to everybody? I don't want to totally speak all the time, so I'm going to just pick on people here this evening. Can you explain to people, Robert, what DeFi is?
Yeah, I mean, at its core, DeFi is just decentralized finance. So the reason I have my hand up a lot because, you know, I build all this stuff. So when you ask, you know, have I used lending protocols? You know, I built a lending protocol. So DeFi just allows us equal access to all these opportunities. So typically, you know, in the traditional financial world, you have all these gates blocking access to particular services. You know, if I want to borrow something, I've got to go through a lot of different hoops. Whereas with DeFi, I have equal access, the same as any other individual. I just got to go to a website, use a protocol. I can swap something on the DEX. I don't have to go through all those hoops. It just really levels the playing field, and that's kind of why I am in the space, because I want to give everyone opportunities to prosper. So if you want to trade, like, you should have that opportunity no matter where in the world you are.
Excellent. And I actually shared an article on social, not an article, a video I found on social about some UK politicians. Simon, I'm not sure if you're aware of that, the UK politician that's being debanked. Oh, I must find it as we're chatting, and I'll drop a link in.
Not Nigel Farage, was it? Having his Coots account closed.
Yeah,
No.
there are others as well. There's a reverend there's quite a lot of people, Simon. I actually posted about it on LinkedIn yesterday. So
it was only yesterday I posted as well, so I should be able to find the details of it. But I did see something of a reverend as well today on Twitter.
That's right.
So I did. So there's people being debanked in the UK, and they're not just like the normal people like us. It's people that are speaking out about things and stuff like that. And
yeah, as I pointed out in my post, that signals danger with CBDCs, because effectively what can happen is that the banks know exactly what you're spending all your money on, whereas at the moment they don't know what you're spending your cash on. But second thing is they could actually wipe out all your funds at the flick of a switch with CBDCs. Very dangerous, and people don't realize how disenfranchised they're becoming.
It is super scary. It definitely is super scary. And I think maybe CBDCs should be an actual topic on its own one of the nights. I think it would make a great topic. So we could have a debate for and against, and just I'll separate you into teams and tough whatever team you're on. That would be fun. Okay, so does anybody, Simon, do you want to explain what liquid staking is? Do you know what liquid staking is, Simon? You do, don't you?
The liquid staking is where you, because I've only done little bits of it. So it's where you hold a token and you stake it, and you get a token in return that you can then, rather than have to come out of a holding period, if you've got to unstake it, you can actually sell that on. So it's not tied in as it would be with a stake token that might have a 14-day cooling off period, for example.
Good stuff. Okay. And who wants to have a go at explaining what a concentrated liquidity pool is? Jacinta. No. Xavier, I think you had your hand up for trying that one.
Hey, Paula. Actually, this one I haven't tried, but I think I can explain the rough idea. And if I'm wrong, people can correct me. It's so I'm not going to explain AMMs, but maybe someone else can chime in if that's helpful. But in a liquidity pool, the basic idea is that you have two tokens, and one people that wants to sell it is going to put that quantity of token out of the pool, and it's going to rebalance the pool in exchange of the other token. The concentrated liquidity thing is It's a new feature which I think was introduced in Uniswap v3, if I'm not mistaken, which allows people, instead of saying, okay, here are 2 tokens and everybody can swap them at any time and any price, you focus your liquidity in a certain area of the curve. So you say, I'm only willing to exchange that token A for that token B if someone wants to make a swap at that price level or within that price range. Is that close enough?
Yeah, that's pretty good. So it is, and that made perfect sense to me. Well, look, for anybody that it didn't make sense to, okay, don't worry too much, because I'm actually going to share my screen now and we're going to have a look at some examples. And each time I do an example, I'll stop sharing my screen and we'll just talk about it. And if there's anybody with any questions and stuff, because DeFi does give a lot of opportunities. Now, before I do, what I'm showing is, for example, in educational purposes. The platforms and all that I've picked are for ease. They're not for any of the particular tokens or anything like that. And none of this is financial advice, okay? So I will share my screen and just get rid of this slideshow. Okay. PancakeSwap. So PancakeSwap is a DEX, a decentralized exchange, and also a place where you can add and remove liquidity from liquidity pools and earn a yield by what some people term as farming, what some people term as just providing liquidity. Okay, it's on a number of chains now. It started off on the Binance Smart Chain. It's now available on Ethereum, Polygon, Aptos, and that's just the test net. It is extremely similar to Uniswap, as Avatar mentioned that there a couple of minutes ago. And Uniswap launched version 3 a year ago, about 14 months ago. And PancakeSwap only just launched version 3 a couple of months ago because the code wasn't fully open source and available until then. So nearly all of the exchange places where you can add liquidity now are moving to version 3, which are these concentrated liquidity pools. So previously in version 2, the way it worked was when you were adding a token to a liquidity pool, you were going to add 50% of one token and 50% of another token. So let's say you were adding to a pool that was USDC and Ethereum, and Ethereum was $2,000 and you added 2. So you'd be adding 4,000 worth of Ethereum. You'd have to add 4,000 worth of stable coin as well. So it was equal when you added. But that when you added that money into the liquidity pool, that was spread infinitely across the liquidity pool, okay? And when I say infinitely, is that when somebody starts buying Ethereum, they're taking your Ethereum out of that liquidity pool and they're giving you USDC in advance, or for it, I mean. Now, as people start buying more, the liquidity goes down and the price may change and your liquidity is spread and you're earning yield all across that. But they found it wasn't efficient. And a more efficient way of doing it was to say, like, for example, on stable coins, if you were adding to a double stable coin pool, so they should always be almost pegged to each other, but as we know, they vary slightly. So if you added to a liquidity pool, there's no point in spreading the liquidity indefinitely because it's never going to go to 2 BUSD for 1 USDT. It's just not going to happen. And all that liquidity was being wasted. So now you can say, well, I'm going to add liquidity and I literally want it to be 1-to-1. So it's in a concentrated pool, so tight. And what this does is really increase your rewards, because once the trading stays within this level, your liquidity isn't spread out in places where it's not earning rewards. Okay, so everybody's now migrating over to this version 3. Like I said, it has been there in Uniswap for over a year now, and it's on PancakeSwap for a couple of months, and other platforms are also introducing it. So let's take a look. First of all, we have farms. So to explain to people what the farms are and how they work, these are the pairs. So in this case, we've got Cake and BNB. Boosted means this is platform specific for this one. You get different boosts on your earnings for different things that you can do. APR. The APR is based on concentrated liquidity pool, and that's why it says up to, and you have an up to amount. This is the liquidity stake. This multiplier is basically the portion of all new minted pancake, the token that goes along with this, what portion this particular pool is going to get of the new cake, and it'll always be fixed at that. So that's what that actually means. And when you go down, you can add liquidity if you have liquidity. And when I seen this first, I kind of freaked out. I was like, oh, what am I doing here? I haven't got the normal 50-50 thing going on. And this is all scary. What we have here is basically where you can set your concentration of liquidity. Okay, so when you're adding tokens to a pool as such, you're going to now pick a range in which you're prepared to trade. Okay, or add that liquidity. This green dot here is the current price. And it's automatically set that in this, that the price can go down 50% or up 100%, and you're still within range and you'll always be earning a yield. Okay, but you can change this. Actually, before I change this, we see up here the interest rate. If you're within this range, which is quite a large spread range, your interest rate is 1.84%. Now, watch that interest rate change. The tighter the liquidity we get, the larger interest rate it is that you're getting. Okay, so if we go right down to that's only a 20% range there, and 20% is still pretty big. 21% within a 10% range, price going down 4% or up 6%. So you can actually adjust this and see, well, what range do I want to add my liquidity to, and find out what interest rate you're going to get for this. Now, when you're adding liquidity, it's not always 50-50 anymore. If the difference between the minus value and the plus value is the same, so if this was minus 12, if I can get it onto minus 12, oh, it's minus 13. Okay, hold on. And this one, where's it gone? There it is. This one is 13. Okay, so they're both equal now. Now you will pay equal amounts in here of cake and BNB. However, if this went up to 26%, you'd have twice as much. Oh, I'm losing all that now. 11, put that down to 22. You have twice as much on this side, so you'd have to add twice as much BNB as you do cake. So it's not always 50-50, and the calculation of it, the spread of it, is based on the difference between the minus value and the plus value. Does that make sense? Yeah? Okay. Now you can also still select the full range, and this was the previous way of doing it. And it does tell you that this is insufficient, and they're not recommending that you do this anymore. Okay, and that's really how you now add liquidity to a liquidity pool on most platforms, is that you actually pick a range. And I'm going to stop sharing now, and I have the option to stop sharing. We just have a discussion on that, because I've been trying a strategy with this, okay, in that I will buy a token, I will add it to a concentrated liquidity pool. It may not be anywhere near the current price at the moment, but if I want to dollar cost average out, okay, so let me just say I bought some Bitcoin and I was lucky enough to buy it at 15,000. Woohoo. And I wanted to dollar cost average out from, say, 30,000 to 45,000. I'm now adding my tokens to a liquidity pool, a concentrated liquidity pool, within the range that I want to dollar cost average out. Okay, now because that range is much higher, if you remembered, I showed you the split of whether of the 50-50. If I have it not to go, price not to go down and only to go up, I'm actually not adding a coin against it. I'm only adding Bitcoin. Okay. And that's the way the split works. So when the price of Bitcoin gets to 30,000, I'll start earning yield on that in the liquidity pool. But because of the way the liquidity pool work and the price is going up, it means somebody's taking out my Bitcoin. I'm getting stable coin in return, and I'm dollar cost averaging out that way on the way up. And that's a strategy that I've started to try. Anybody else doing anything like that? Does anybody think it's a good strategy or a shit strategy? Because I'm only trying it like.
Sorry, I can jump in there if a little bit of experience on that. There's something called impermanent loss as well, which kicks in. So when you have a coin that like you say, if the price starts to go up, your coin is being sold and you're getting your USDC for that, or whatever token you have against it. But equally on the other side, if the coin is going down, you're always going to get the lesser coin. You're going to get more of the lesser coin. So you kind of end up in a circumstance where you're getting devalued. But again, with crypto, as we know, it's volatile. It goes up and down. So you don't have to sell at that time, any one time. You wait till the market maybe corrects and goes in your favor before you maybe sell that coin. But you just have to be aware of impermanent loss. And just from experience, I think anything that's, as you're coming out of if you're on a bear or a bull run, or your coin is consolidating where it's just going sideways, that's a good time to pick a range and add some liquidity to a token, because you're staying in a range maybe for a period of time, and you can get some good fees and from that aspect. But yeah, impermanent loss is one to just be aware of as well.
So that's what I was trying to play to my advantage, was an impermanent loss / impermanent gain in this particular case. In that, so I know it's going to start selling when I reach, I've added my liquidity at 30,000, for example, and I know it's going to start selling then. That's when I'm happy to start selling. Then you don't have to worry about impermanent losses. And then one of the other things about these new concentrated liquidity pools is that when you enter a liquidity position now, compared to previous, because all liquidity positions now are unique to an individual, and they had to find how we used to get liquidity pool tokens back, and everybody's liquidity pool tokens were absolutely identical. But now they can't be identical because everybody's liquidity is different. So for version 3 to work, they've implemented NFTs. So your liquidity position is actually represented by a unique NFT. And when you come out of range in these new liquidity pools, you still own the NFT. You have to burn the NFT to release your tokens back to yourself. If you don't burn them, when the token comes back in within that range, you just start earning liquidity again. So this version 3 has really mitigated the risks some of the risks involved with impermanent losses that were there previously.
Yeah, I think you're definitely onto something, Paula. Like, this is a sound strategy. There are always risks in doing any of this, of course. Uniswap v3 was introduced precisely because of impermanent loss, and there are like a few other dexes that have tried to mitigate impermanent loss. I think Uniswap is kind of like the most successful so far. Like, there was Bankor, but he blew up during the bear market. There's been like a few others that just the algorithms didn't really work. Impermanent loss is like a really difficult challenge, but also to your point, like it doesn't have to be something bad. You can use it to your advantage. And if you were just looking for yield, which a lot of DEX liquidity providers are looking for, then impermanent loss doesn't really matter. Like, if you're earning 20-30+% yields and you're happy with that yield, then having some impermanent loss is kind of irrelevant. What you want is just like total portfolio growth. So impermanent loss is really only an issue when you are long on the underlying assets. If you have like a bullish thesis on Ethereum, for example, and you don't want to sell Ethereum, then you probably shouldn't be providing liquidity to a DEX. You should only be in a DEX if you care to lose that Ethereum and get it replaced with some other cash equivalents. So yeah, using DEXs like this to be a liquidity provider is a good way to sell tokens. So I kind of used that in the past. I manage like protocol level liquidity. So I manage those positions as well to kind of just like diversify. So it's, in a way, you can use it for dollar cost averaging. So yeah, not always permanent loss is bad. Like, so on the internet you hear like, oh, be careful of permanent loss. Like, it's not always a bad thing. So like, be aware of it, understand it. It can be a bit complicated, but it's not always a bad thing.
It is a bad thing when it's a really unknown token that, and a lot of tokens were launched through these launch pools on Binance Smart Chain and other places like that. And they would be launched and they'd be basically rug pulls, but the team would slowly just be selling and draining, and then everybody else would, and then you're left with a bag of something that's worth nothing. And that's where it can be an issue. So it is because all your if you put it in against stable coin, obviously as they're selling, they're getting your stable coin and you're accumulating more of that shit token as such. So that's one time to be really careful on it. Has anybody else got any experience with it that they'd like to share? Don't be shy. Okay, well then I'm going to share my screen again. Okay. And I have up next liquidity staking. Okay, so this is Lido Finance, and Lido Finance have been pushing boundaries out there when it comes to liquidity staking. And the main boundary they're pushing at the moment is that they've got such a high amount of Ethereum staked on Ether that it's becoming a critical level where consensus needs to be come into play a little bit. So how this works is, previously when you want to stake any proof of stake network, so Ethereum recently moved to proof of stake, Solana's proof of stake, there's loads of proof of stake blockchains out there. And staking in the sense that we're talking about now is staking to secure a network and proof of stake. And for most people, it's not efficient to stake your tokens yourself and run your own node. So you would join a pool and you'd stake with other people in some sort of staking application. And what Lido Finance came up with the idea, and these I'm nearly sure were the first to do it, to have this liquid staking token. So when you staked your Ethereum, they would give you it normally when you stake your token it becomes illiquid. You can't use it, it's locked in, it's securing the blockchain, and you're earning a little bit of yield on it for the fact that it's actually staking and protecting the blockchain. So when you stake it with the likes of Lido, you can still get that yield, your 4% or whatever percent it is for securing the network, but you also get a token in return representing what you've staked. So I think they use ST, let me just check for a second what the name of the token is. Lido staked Ether, so it's ST Ether. Here it is here. Okay, so the Lido staked Ether is basically a token that they've given back to people in return for the Ether that's being given to Lido to secure the Ethereum blockchain. This token is liquid, and because it's actually liquid, it means you can go off and you can use it in other protocols. So you can add it to liquidity pools and you can get your yield on it in liquidity pools. So you're doubling up on your yield. You're getting your yield for staking on the platform, and then you're also getting the advantages of being able to use a token for staking, for borrowing against, for lending, and for all the other DeFi applications that there are out there, which means POS staking is no longer taxing when it comes to liquidity. I think I'll stop sharing now for a second because I'd like us to have a little discussion on what's come up with Ethereum and the fact that so many people, and you can see how high ranking it is in CoinMarketCap, so the amount of ether that's staked in there. Is this of an issue to Ethereum when it comes to centralization and control? And what do people think? Marco.
Technical problems here, so can't speak. Okay.
Okay, no problem. Simon, what do you think?
Yeah, I think with any of the tokens you've got, you get whales that hold large amounts of them and have a lot of influence over price. I think the issue with Lido is Lido's got so much of it that, yeah, I think they do have. I can't remember the percentage. Did you know the percentage actually?
Yeah, I don't know the percentage offhand now, but it's very high.
Yeah, quite a large portion of it. So it does bring into question, I guess.
It's a tricky one. But I suppose with there being there's only really been the one main player, because this is really new and it kind of came out with needing the 32 ETH to be staked to run an Ethereum node, and 32 ETH what people thought was quite expensive and a lot of liquidity to lock up. And these guys were saying, "Well, do it with us, and we'll give you something back in return."
Rocket's the other one, isn't it? It's quite large. So there's a couple
Rocket is large, yeah.
Quite big players.
Who here is doing liquidity staking and who are you using?
Well, I do liquidity staking, but I don't use Ethereum at all. So I only really have experience with Cardano specifically, which takes a radically different approach. Like I know that there are others like Rocket for Ethereum, but Lido is like they are the real dominant player, and so that is a huge centralization concern. I know in theory it could equal out over time and more players could enter, but like we're just not seeing that. It's kind of like with the Bitcoin mining pools. You know, in theory, you can have lots of different mining pools, but that's just not how the reality plays out. It's like in reality, you have like the most profitable mining pool, and then everyone goes to that one. And so it's the same case here. Like you might have competition, but why would someone go to like a smaller service provider when they can get potentially better service, there's more trust, more feedback, more yield with that one. So I think it's just like a really difficult system to decentralize. So that's why I kind of sit on the sidelines on Ethereum. Like I really like what Ethereum has brought to the blockchain ecosystem, but they have a lot of issues to work out. In terms of liquid staking, on Cardano, you don't have to worry about going with a provider because it's built into the blockchain itself. So I can just have my Ether in my wallet and it's already liquid. I don't have to do anything. I can move that around. I can choose what pool I delegate with. And then there's also liquid staking at the protocol level. So when I open up a CDP in the synthetics protocol, I can have that Ether staked. And so then I'm kind of earning yield from the protocol and earning yield from the blockchain. And so I have double yield there. So that's kind of like the benefit of liquid staking. But yeah, most of my experience is in Cardano, not Ethereum.
That's excellent, because I wasn't aware that it was automatically liquid when you were staking on Cardano. I have some stuff staked on Cardano. I must check. So I must. Does anybody else use any of these liquid staking platforms? Okay. Okay, well, I'm going to share my screen again. So, and this time I am in Orca Finance, and Orca Finance is a DEX on Solana. It's an aggregation DEX on Solana because it works with Lido and Marinade and a few other different places. And these use concentrated liquidity pools like I was showing you there on Pancake Swap a couple of minutes ago. But what I wanted to show you was part of my strategy that I was talking about a couple of minutes ago. So I talked about Bitcoin a few minutes ago and selling out and when I wanted to sell out. But I've also been using these liquidity pools, these concentrated liquidity pools to buy in and to dollar cost average in as the price is going down. Okay, so I'm going to just explain some of the bits and pieces that are on the screen here. I'm reading these because you'll see these figures, but they look a little bit different on different platforms, the way they actually have them. Okay, so the first thing is fee rate, and we can see we've got Sol USD twice here, and both of them have two different fee rates. One of them is 0.01%, this one's 0.05%. So that's the fee that the person that's trading is going to be paying to that liquidity pool. So obviously people are going to pick a liquidity pool where they're paying the least amount of fees that they can, as long as there's enough liquidity in this pool. Okay, the liquidity in this pool is only 82,000. The liquidity in this pool is 1.8 million. So there's an awful lot more liquidity in this pool than there was in this pool. This pool also has a far greater trading volume. Now, as a proportion, or I'm not sure as a proportion which one is greater there. I think this one is greater as a proportion. But as a proportion of liquidity, when you're looking for a strategy and you're trying to decide which pool you want to enter into, if you're doing all this strategically, you want to find a pool where the volume is greater than liquidity, and a pool where you don't really want to be going into a pool where the fee rate is 1%, because you're going to see the volume drop fairly quickly on a pool like that. People only revert to them pools when there's no liquidity left in other pools. Okay, so you want to pick a pool where the fee rate is quite low. Now they're saying on this that this is per 24-hour yield, okay, 0.332%. And let's say I wanted to buy some Solana. Let's just say I wanted to buy some. And I have some USDC in my wallet, and the current price, I'm not sure what the current price is, but we'll have a look when we go in. So to buy this, I come in here, and this is assuming you just want to add liquidity as a liquidity provider, but I'm going in with a different strategy that I want a dollar cost average in. So I'm not going to select the ranges that they're actually saying to me. So they've got an active range of the price of Solana being between 16.95 and 22, and I can just pick that one. I can pick this more passive one, or I can pick a custom one. And when you pick a custom one, you get the same sort of screen that we seen in Pancake Swap a few minutes ago. So the current price is this white line. I want a dollar cost average in between $18 and $16. And I want to buy Solana in that range there. Okay. When I do this, I don't need to add any Solana to this pool, because do you remember before I was saying it depends on the plus side, the difference between the plus side. So if this was up here, we see now I have to add 77% USDC. But we're in the negative side here. So I only have to add USDC. So if I want to buy in between these prices here, let's just say, I would add in the USDC only, okay, that I wanted to spend. So let's choose amount. I don't think I have any in my wallet. Oh, I do. Look, I have 69. I can put that in there into the liquidity pool. Okay. I haven't added in any Solana. So remember the old way, we couldn't do this because it was always 50-50. I've set my price that I want to buy in at. I can then enter this pool. Now this pool isn't going to give me any yield at the moment because there's no trading going on in this range. We're out of the range. Okay. And I could just confirm my deposit, but you know what? I'll just go ahead and do it just to show you. Okay, Solana is really, really cheap and it's very, very fast. Okay, so that's done. I've got this NFT back, okay, to represent the yield that I have. So these show you the actual NFT as well. My deposit is complete. Now, if I go back to my portfolio, where's it gone? Hold on. To log in again for some reason. Okay, here it is here. So this is the liquidity I've now added to this liquidity pool. If I expand it, you can see my liquidity is in this red range here. It's out of range, so I'm not yet earning any yield, okay? That's absolutely fine with me. But as soon as the price starts dropping down to here, and within my range, not only am I going to start earning yield, but I'm also going to start dollar cost averaging in within the range that I said for the amount of money that I wanted to spend, and it's all done automatically for me. And that is the strategy that I'm doing to dollar cost average in, which is very similar to the strategy I said about dollar cost averaging out. But that's what I'm doing to dollar cost average in. So what do you think of that then? Am I crazy? Because I do play with these things and Jacinth.
Well, I think we're all crazy, so full stop. Everybody in crypto is crazy. You got to be. But you have to have an adventurous streak, and you have to learn from doing something new and something different. So I would have a go. I'm gonna, while you're talking, I'm setting myself a mini target that, within 2 weeks of a try. Start simple, have a try. But I think I've got the gist. It's interesting seeing the polarized points, and that helps you visualize. I'm a bit of a visual person. I've got to see it, so that's really helpful. I would definitely have a go. I didn't quite understand the at first when you see what's the point and advantage of being out of range, but then you don't have to do anything when it drops into range. And I'm all for the work. I'm not for alerts and running to my laptop. Yeah, I'm all for that. Yeah.
And you can actually set alerts to your phone and that from them. Well, with some of the protocols you can. I know with Orca Finance you can. I can set up SMS text message alerts and different alerts to let me know when it's in and out of range and stuff like that. So, Miss Fletch, you have your hand up there.
Hey.
Hi.
Hi. I initially put my hand up to say yes, I had done DeFi. I got it mixed up with DEX. So
okay.
I've learned an awful lot today, and I'm kind of getting it now. And as the lady just said, I'm actually going to give it a go. I think it's quite a clever thing that you're doing, in as much as it's automatic. You'll get if the price, it's like shorting. Is that correct? Because
yes.
Right. Okay. So you're doing that. That's good. But what happens if it doesn't go down to that price point? You just sell your.
Then I don't get to. Then I still have my stable coin. I can just burn that NFT, and I just get my stable coin back. So I haven't spent anything.
And is there a time limit? Is there a time limit there? Can we time down?
No.
Okay.
As long as you hold that NFT. And that's the same on Pancake Swap and on Uniswap as well, that it with version 3, because everybody's liquidity position is different, it has to be represented by a non-fungible token. And as long as you hold that non-fungible token, you hold the liquidity in it. Right. And you can burn it at any stage and get your liquidity back.
This may be thank you for mentioning that. This may be a very obvious question, but I don't know the answer, so I'm going to ask it. Is that Orca linked to one of your wallets? Because where does the money go when you...
Yes, it is. So Orca that I was shown there, and like I said again, I was using these platforms for simply use and not because I'm actually fully recommending them, okay? Now I do use Orca, I'll be honest with you, I do personally use Orca myself. So I do. Orca is on Solana, and I use the Solflare wallet on Solana to connect. So it's very much like a MetaMask, and I just connect using that.
Okay,
So the money has to be in your wallet first. Then when you sign the transaction, it's all done by smart contracts. And that's one of the risks of DeFi, and risk is actually the last topic I wanted to finish on. So probably good timing because we haven't got too much time left. There is risks involved in DeFi, and we spoke about impermanent losses earlier on today. But a lot of the hacks and all that you'll hear of, it's not blockchains being hacked, it's smart contracts being hacked. And there's always vulnerabilities in smart contracts. And any of these DeFi protocols could have a vulnerability and could be hacked. And that's the risk that you take. And it is a big risk. And that's why you really need to use solid protocols. And, you know, we were talking about Lido having the larger portion of everybody doing liquidity staking because all of their contracts have been audited and people trust them and stuff like that. So people are going to trustworthy places. So you need to really do research and make sure you know what it is that you're using. If you come across somewhere and they're paying thousands of percentages in APR, is it too good to be true? And you really need to start asking yourself questions like that. There's a question in here from Doug. One of the things that strikes me most violently is that the increase in complexity of crypto and associated variant strategies would discourage widespread adoption of crypto by the general population. Yes, I agree, Doug. So I do, that these sort of strategies, like I was in crypto for years before I touched DeFi. And it doesn't mean when you come into crypto, you have to go to DeFi. You might come into crypto because you're into NFTs. And then when you're in NFTs, a couple of weeks it goes, or a couple of months, it goes beyond buying JPEGs to, oh, you can borrow against a JPEG and you can stake a JPEG, but you don't learn all that at first. So I wouldn't be saying to new people, come to crypto because we have DeFi.
No, but what happens is inevitably people who have got no experience of crypto will seek out people who have got experience. And those people who have experience will start to talk in this sort of language and about these sorts of strategies. Just human nature. I mean, we all like to show off. And so as a result, I think it's extremely, I'm not dissing what you're doing. I'm not but I'm saying that it's going to it is making it very difficult for widespread adoption. And without widespread adoption, you're going to have volatility.
Yes, 100%.
It's a small community and therefore very prone to sort of variation, to wild fluctuations. So it's just a point, you know, I'm not dissing what we're doing here or anything like that. It's very valid stuff, but it's just an observation, really.
No, I agree with you, Doug. So I do. We know ourselves that the more people that are in the market, the more people that are in crypto, the higher the market cap is going to get. The higher the market cap gets, the more liquid the asset becomes. The more liquid the asset becomes, the less volatile the asset becomes. That's all 100% true. But I also think for the people that want to take it further, that the education also should be provided to them and be available to them as well. There's always there will always be people that want to learn more, that want to try out new things. And that's what blockchain and crypto is all about, a big experiment still.
Yeah, I think, as you know, my big theme is I see lots of dangers in, sort of overbearing government. We don't have small government anymore. Nowhere has small government. And I see blockchain and crypto as being an antidote to that, but it needs a widespread adoption. And that's really my motivation in all this.
Yeah, it does need, it definitely
It's a
does
political
need.
thing with me, not really trying to make money, to be honest.
Okay. Okay. I like to make money. So, Miss Fletcher,
Yes,
you
I know
had
you
your
can
hand
call
up
it.
there a second ago.
Yeah, I was literally going to agree with what you were saying, in as much as I've been in this space for a little while, but several years, but since 2019. And it's only now that I'm touching DeFi, which has been made painfully obvious today because I got it mixed up with DEX. So people who come into the space, they're not going to, it's highly unlikely they're going to immediately go to DeFi. And if they do, that's on them. People, it's all over the place. Do your own research, this, that, and the other. So people have to be responsible for their own actions. So I do think that I wouldn't really worry about this being overcomplicated. As Paula said, it's like this type of advanced stuff needs to be there for people who want to know a bit extra and go further with it. But however, the average Joe or Josephina will just want to do the, trading or hodling. They're not. It's highly unlikely they're going to be jumping straight into DeFi.
And I actually relate to that in traditional finance, and how many people in the world are actually up to date in their financial literacy skills as it is with general finance without hopping into crypto. There's only a small proportion of people that know what compounding is. And people don't understand basic finance, let alone crypto finance.
Yeah, totally agree.
It's interesting.
Yeah, but like every industry, there's trailblazers. Somebody has to set the precedent. Somebody has to go first and test the water. And Paula, you're just out there getting your feet wet. You're up to your knees.
We're in a bear market, peeps. What am I meant to do?
You're bored. You're bored, really, aren't you?
I have I farmed. So the reality of the situation for me is I farmed all the way up that last bull run, down the dip, back up the double top. Actually, no, that's a lie. I've been farming since before then, since the DeFi summer. So all the way over here. And then we came up and then we went down and then we went back up again and then we went down and now we're over here. So I've been accumulating this way through through version 1, version 2, now version 3 and like, I'm quite happy to say that my accumulation has been substantial. So obviously I've held, but lots of you know that anyway. So I held loads, I sold loads, I have a good time. But I've accumulated substantially from doing this for the last 2 years, substantially.
Oh, cool. It's another option, and it wasn't one that I'd previously explored. So as just the other lady, I'm going to put a note in my diary to definitely give it a go.
But you know what? I'd love to hear you come back to us on it and how it went for you and how you start doing it. And like, I remember this is actually our 95th meetup here with the Irish group. And I remember back at the start, we were talking about DeFi and we were talking about cross-chain stuff. And we were trying to help somebody move from Ethereum to Polygon to stake something in a DeFi platform on Polygon. And the fear they had, even though they were competent, because it was all new to them. Oh, bridge and this, that, and the other. And there's a fear when you're making transactions, when you're signing them. So just when you're doing it, be careful. Make sure you sign everything, make sure you check everything, double check, make sure you're on the correct websites, that the URL is correct, that you've got it from a trusted source, and just really stay safe. Safety is such a big thing. Protect your assets, whatever you do. And I'd love the two of you to come back and tell us in a couple of weeks or a couple of months how it's gone for you and what you have learned. Because look, it's a learning curve. It is a learning curve for all of us.
For sure.
So it is. Well,
Yeah,
look, on that, it is 9 o'clock. So we are going to end there. So we are. Don't forget that next Tuesday we have the UK meetup, but everybody's welcome. There'll be a link dropped into the Telegram channel for that. And then we're back here in 2 weeks' time. And then we have a panel on that night. And we're going to talk about personal branding, specifically personal branding in the Web3 space. So I'd like to thank you all very, very much for coming. And I can't wait to see you all at the next one.
Thanks and
Thank you,
bye.
Paula.
Thanks,
Take
Paula.
it easy. Bye
Thank
now.
you,
See you,
Paula.
Joe.
everybody.
See you,
Bye.
Bye.
Rob.
Good
See you,
evening.
Jacinth. See you, Elena. See you, Orca. See you, Henrique. See you, Victor. I didn't even get to say hi to you, Victor.
Yeah, I received some visit here, so I lost part of the meeting, but I will see the record.
The recording will be available. Zavatar, thank you so much for your
Bye-bye.
input there this evening. It was great. So it was. Wani, it's so great to have you back with us.
Thank you. Bye-bye.
Bye. See you all soon. Bye-bye.